now you got this one, keenly, widely awaited Tata Technologies. Just a quick word on GHCL. That's the soda ash company. It's down 6.5%. That's a sharp cut, and it's backed by volumes as well. Look at the volumes for this time of the day. It's pretty decent. So just thought I'll highlight that. A few other names on the downside. Dabur is down about 1%. Loris Laboratories is down 1.25%. So it's slow, but it's coming up. Dalmia Bharat is down a full 3% now at about 1848, and that's the number 2 volume traded loser that's coming up on my screen at this point in time. All right. More on this in a bit from now, but our market master of the day is with us. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company, and he's joining us to take some questions. Mahesh, great to have you back on the program. Thanks very much. You've been, and correct me if I'm wrong, at the margins, been a little cautious, right? Maybe things have gone up too fast, too soon, and of course, out of whack with what the rest of the globe is doing. How are you feeling with the Bank Nifty at new highs? And of course, I mean, the Nifty almost there practically. What is your sense from here in terms of return potential, absolute return potential?
Yeah, good morning. You're right. I think we have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We've seen a decent amount of recovery over here. Demand has been fairly strong, and rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. Earnings growth has also been fairly steady. We haven't seen any major downgrades to earnings after the second quarter numbers. It's been a marginal downgrade. It's been about the valuations, and more so the relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down, and valuations were looking very attractive. So relatively, we've seen some flows there from the FIS side. But I would say the market would probably consolidate over here, I think, until the budget. Now we have the budget in a couple of months. And I think until then, market should remain fairly range bound. As we move to the next calendar year, you will see clearly global slowdown affecting, and that could lead to severe earnings downgrades, at least in the US. And how the global markets react at that point in time will probably drive how we do. But overall, I think we're still very positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here. The risk reward looks fairly well balanced because now interest rates have gone up, so the bonds are also now yielding decent returns. So there is some money which could move into the debt side, especially into the debt funds. And we've seen that in this month also, that the equity flows have kind of moderated down. So I think that will probably cap the upside from a very near-term perspective for the market.
Okay, well, Bandhan Bank is another stock that's moving up. We addressed that earlier as well. 3% higher now on Bandhan Bank, and the volumes are picking up there. Bandhan Bank has received some amount, 920 crores under the credit guarantee scheme. So the credit costs for Bandhan Bank are expected to fall because of that, and that stock is up about 3%. We'll talk about that in greater detail as well. Mahesh, this entire space, right? I mean, financials, NBFCs, auto financiers, many of them have done really well up until now, PSU banks. In this entire gamut of financials, which is a space where there is still some valuation headroom and growth room as well?
Yeah, so by and large, we've seen a decent amount of moving all across the financials. The banking stocks have done much better. The PSU banks have actually done even better recently because the valuations there were very, very depressed, and we've seen a very, very benign kind of a credit cost cycle. But I think the NBFCs, some of the NBFCs are now, they're still not really done as well because in a rising interest rate environment, we've seen that the banks have actually benefited in terms of NIM expansion, whereas NBFCs have seen some kind of a NIM compression. But as the asset side also kind of rebalances, right, the rates over there, I think we should see the margins on NBFCs starting to improve in the next, probably the first quarter of next fiscal year. So I think some of the NBFCs are now looking at fairly reasonable valuations over there. If you take a slightly medium-term view, especially the asset, I mean the vehicle finance companies over there, and PSUs I think are still offering reasonable value, but again we think PSU banks would still be a more of a trade. I think structurally, the large private banks will continue to gain market share. And even there, I think there are pockets of reasonable value in the private sector banks, right? Some of the large banks haven't really done as well. So I would say overall, the space looks fairly valued. There is, I mean, despite the price or performance, we're not seeing the valuations have really reached levels, okay, much significantly above the long-term average across the sector.
Okay. All right. All right, Mahesh, thanks so much for stopping by and filling us in with your views on the index as well as on a couple of sectors that we discussed. Wishing you a good day ahead. Well, let's move on then. Macrotech developers, they receive a solid response for its QIP and they've raised close to 3,500 crores at around 1,026 rupees per share. To discuss this, Abhishek Lodha, the MD and CEO of the company, joins us on the show. Hi, Abhishek. Morning. Thanks so much for joining in.